everyone, you've tuned into Buy Now Sell Now Weekend. I'm Mubina Kapasi.
Hi everyone, I'm Avan. The bunch is in a rough week for the markets, but we're here to help you out with your stock queries. So here's what we will be discussing today on the show. We've got some individual stock questions coming in on IOC as well as on Sun Pharma.
And this time around in our portfolio segment, we'll be discussing Raja Shankar's portfolio.
Well, to our guests then, and A.K. Prabhakar is Head of Research at IDBI Capital Markets. He's with us on the fundamentals and joining in on the technical side. Amar Singh, Head Advisory, Angel Broking. Well, welcome to the show, gentlemen. Let's connect first up with the first query for the day, an email query which has been sent in to us on IOC. This has been sent in to us by Saurabh. He's got 3,500 shares of IOC. He's purchased it at 286 rupees and now wants to know if he should book profits at levels of 300. His time horizon is the next 2 to 4 weeks. Well, it's a very short time horizon. So, Amar, I'm going to come to you first. IOC, off late has been in the news with respect to some petrol price cuts that the company has undertaken, some diesel price cuts as well. In the last week, it shaved off about 3%. Just walk you through the highlights of the kind of numbers that it delivered. Did see a turnaround in Q2. Delivered a PAT of about 3,000 odd crore rupees. The top line growth as well did manage to improve to 99,950 crore rupees, and operationally as well, it delivered a pretty steady set of numbers. But purely from a technical standpoint, do you think that for the next 2 to 4 weeks, it is advisable to stay invested, Amar?
Yeah, looking at IOC has corrected from almost 330 levels to a recent low of 281. And from there, it's currently trading around 300 levels. So yes, 280 is a major level of support. He can use that as a stop and look at booking profits around 320 levels, because overall the breadth of the market also we are seeing sell-off happening. So he should ideally book profits in the range of 320 levels in IOC.
Okay, that's of course a technical call coming in on IOC. Hold on, as there may be some more potential upside over there. Target of 320 is what Amar is looking at. But Mr. Prabhakar, come in on the fundamentals for IOC, and especially the way crude prices have been moving, and most importantly, we do have that all-important OPEC meet that is of course going to be coming up. At 300 rupees, what would you advise our investor to do?
See, the results were below expectation. But going forward, the GRMs have moved up, so I think now the stock has potential to move up. So if you can hold for 3 to 6 months, this stock can give very good return. I see a target about 320, and importantly, whatever is happening in US, the US election or demonetization in India, this stock will not be impacted. So if you take funds, they will be more keen to buy oil marketing companies with the GRMs moving up. So hold on to the stock. I think with the target, my friend told 320 can come, but more than 320 next year, 2017, it is possible.
Okay, that's a call coming in on Indian Oil Corporation. There's once again a whole call coming in from Mr. Prabhakar as well. But Saurabh has another query, and this time around it's on Sun Pharma, nifty major pharmaceutical company, which he bought 3,000 shares of at 635 rupees per share on US election day. Of course, his question is, should he sell it at 700 rupees with time horizon of 2 to 4 weeks? Quite a pertinent date really that he bought it at on election day, because remember the odds were that if Hillary Clinton does win, she will go across to really reduce medicinal costs, which would not of course do well to pharmaceutical companies, especially based in India, those having exposure in the US markets. And that's the reason why we did see pharma stocks really crack in trade. And then of course there were the demonetization woes. Amar, come in on the technicals for Sun Pharma. It's of course slipped off significantly from the recent highs that we saw, and clearly our investor over here has done some sort of value purchase over here. So what would you advise him?
Overall, by looking at Sun Pharma, he bought on a very eventful day, and the prices had corrected to a low of 572 levels, and currently they are trading around 690 levels. So he can hold on to Sun Pharma, but look at booking profits in the region of 730, because on the upside there is likely to meet with selling pressure somewhere in the region of 770 to 780, because overall there is still selling pressure in Sun Pharma.
Okay, that's the advice coming in on the technicals, maintaining a fairly positive view on the stock. And, just wanted to get to you, Mr. Prabhakar. A lot of experts have been a little bit circumspect on the pharmaceutical space on account of the US FDA concerns. But when it comes to Sun Pharma, in light of the fact that CLSA's recent report says that there is improving growth, Ranbaxy synergies have led to strong performance and continued performance, more importantly, is expected in the long haul. They've also raised the FY17 EPS estimates by about 6%, saying that on the valuation side, it looks compelling. Do you think that Sun Pharma is a standout? Do you think it merits a hold?
See, I have slightly different view.
Okay.
Now, there is a US FDA inspection in Halol plant, now which might come as a positive surprise, but use this rally to exit, because in US the price hike which these pharma companies have taken for generic is very high, and that investigation is going on. How that will turn or how it will impact these companies are not known now, and if that impacts, then the impact can be very big. Now Taro has almost hiked by 1000% the medicine prices, so that impact, if it happens, whenever it happens, so that will be bit negative for Indian pharma companies. So use rallies to reduce position, because you are looking at a short term. Longer term, yes, if you are looking at 3 to 5 years, I think Sun Pharma is a very good bet. But short term, there are pressure points, and whatever is happening with US FDA, there can be some negative surprises also, and you will get one more better entry chance in the stock.
Okay, considering the fact that you do have a short-term view, Mr. Prabhakar is advising that be a little cautious on the stock. There are pressures in relation to the FDA, but of course he is also advising that on a long-term horizon, 3 to 5 years, this may be a good stock to hold. Let's just slip into a short break, and after we come back, we'll be discussing Raja Shankar's portfolio on our portfolio segments.
This is Buy Now, Sell Now Weekend. Let's take it straight to our Portfolio Advisor segment. Today, Raja Shankar is sending in his portfolio. He's 42 years old, from Kanyakumari, and he has a long-term time horizon of the next 5 years. Well, let's find out what he holds. First up, there's VA Tech in the portfolio, close to 150 shares at 670. JK Tyres, tire stocks have been in focus of late, 500 shares at 100 rupees. You got Tech Mahindra, 478 is the buy price. To some more mid-caps then, Tilak Nagar Industries, 1,000 shares at 21. He's got Karur Vaisya Bank at about 498, close to 100 shares, really bleeding on that investment. Infi features on the list, 75 shares at 1175. There's Vimta Laboratories, he's got it at 82 bucks, close to 250 shares. Making some money on that one, and then making money on Motherson Sumi, 200 shares, purchased at 281. And finally, Noida Toll Bridge, 500 shares at 22 rupees. As Mr. Prabhakar, a lot of mid-cap stocks, he's been caught on the wrong foot with quite a number of them, so let's help him out. First up, what's your advice on VA Tech? Do you think JK Tyres is a good stock to own within the space, and Tech Mahindra, would it be a standout performer?
See, I'm positive on all the three stocks. I have a view of 750 in VA Waptech. Now, and JK Tyre, due to this demonetization, now I've reduced the target to 145, but after 1 or 2 quarters, we might revise the target. Now, the demand might come down in the first 2 quarters, this 2 quarters, but for a long-term investor, you have a time of 5 years. I don't think there is any problem in tire stock. The growth story will remain the same now, and it is a very good stock to hold. Tech Mahindra, we have a target of 480 for next 1 year. Now after 1 year we can revise the target, and we can see how the performance is. Next 2 quarters is important for IT stocks, now based on what is happening in US and what is happening in Europe.
Okay, so it's a whole call coming in on all of those 3 stocks. More upside potential, clearly that's what Mr. Prabhakar is expecting. But getting a check on the next three stocks then. Tilaknagar Industries at 21 rupees has found some place in his portfolio. Karur Vysya Bank bought it at 498 and currently the stock is languishing at the 90 odd rupee levels. And lastly, Infosys is once again a large cap IT company. 1,175 is his buy price and he is clearly losing out some money over there as well. Mr. Prabhakar, comment on these three stocks.
See, Tilaknagar Industry, the consumption story is going to take a back seat. So I don't think this is going to do good. So I will advise to exit and add on to Power Grid, where I have a target of 275. Whereas in Karur Vysya Bank, I think there was a stock adjustment. I don't recollect whether it is bonus or stock split. So we have a adjusted target of 118, and this cost price also should be lower. It should not be almost 498. So I think there also we have a hold, and at current levels you can buy. Now demonetization is going to help bank grow their deposit, and number of customers are also likely to grow. So I think banking stocks are likely to be the major beneficiary. So hold on to Karur Vysya Bank and Infosys. Now today also we saw the management telling that Mr. Trump is not very negative. Maybe there can be some impact on the margin. So that is okay. IT stocks have good margin. A small impact on margin is not going to worry them. Now maybe they should employ a few more people in US. Now that is a maximum, I think, can be the impact. But growth going forward, if it is going to be 8 to 10%, that is a good growth in this anemic global environment. So hold on to Infosys. Our target is 1,248.
Okay, that's a view coming in on some individual stocks, but let's get to the next set. And Vimta Labs, do you track this company closely? What would be the prospects going forward? Motherson Sumi at about 281, just about making some money, but do you think that this is a good price? And Noida Toll, what would be the advice here, Mr. Prabhakar?
Yeah, Vimta Lab we don't track, so I think we can exit that stock and buy Bharati Airtel. Now with the demonetization, the market view has changed, perception has changed. Telecom is a sector which is likely to benefit out of demonetization. We feel e-wallet and more data usage is likely to come. So that means the beneficiary can be two major companies. One is Reliance Jio, the other thing is Bharati Airtel. We have a buy on Bharati Airtel. Our target would be 400 rupees. So shift Vimta Lab to Bharati Airtel. In Motherson Sumi, we are still positive on Motherson Sumi. We have a target of 360 rupees. So hold on to Motherson Sumi. In Noida Toll, there is a controversy or there are court cases going on. When you are in doubt, it is better to exit and get into a better stock where visibility is there. So I would recommend Reliance, target 1,220. Now previously we have talked about GRM margins improving. Now so that is one positive, and telecom as a sector can get re-rated. So both together is going to benefit Reliance. So Reliance is a good buy at these level, and the stock has not performed for a very long time. And with 3 expansion coming on stream in the next 6 months, I think this is one stock which can surprise on the positive side.
Okay, some chops and changes over there. Buy Bharti Airtel, hold on to Motherson Sumis, and also replace Noida Toll Bridge with Reliance Industries. But do remember that this portfolio recommended here is a model portfolio, and please do consult your individual investment advisor before taking any investment decisions. Let's take a short break, and after the break, we'll be bringing in some more technical as well as fundamental ideas.
Great to have you back with us. This is Buy Now Sell Now Weekend.
Okay, and let's just talk about the markets then, because they clearly merit all of the attention. The kind of hammering that we have seen in the last week, we saw the benchmark slipping about 2.7% last week, in fact slipping below the crucial 8100 mark as well. Ditto was the move with the Sensex, which lost about more than 600 points, 2.5% of losses coming in over there. Amar, comment on the markets at this point of time, really, because the benchmarks have seen quite a hammering, especially after the previous week's move. Do you think that there's more pain in store for us?
Yeah, overall what we are witnessing in the markets is that any pullback or any upside movement is being looked as a profit booking or as going shorts in the markets, because after the serious correction that we witnessed, 8,000 levels are going to be very crucial for Nifty, and overall the short-term trend definitely is very weak, so any pullback will be used as a shorting opportunity or for those looking for an exit opportunity, because the markets are likely to consolidate. The key levels to watch out is 7970 and 8,000 level. That's a key support zone. If that is taken out, then we are headed even lower towards 7850. 7900 levels. On the upside, the level to watch out is 8160 to 8200 in the short term. If markets sustain above that, then we could see some rally towards 8270 to 8280, but yes, the short term trend is definitely down.
What about the bank index, Amar, because it was saw one of its roughest weeks since mid-February, continues to remain awfully choppy around the 18,900 mark rather. What would be your advice as to how one should really be approaching the banking index? Would you advise any trades here?
Overall, as far as banking is concerned, if you look at banking per se, the public sector stocks, the public sector banks, they have clearly outperformed most of them, but now they are also witnessing profit booking the way we've seen sell-off across the board. So that's there. On the bank Nifty per se, 18,700 to 18,800, that's a major level of technical support for bank Nifty on the downside, and on the upside, the resistance would be anywhere 19,250 to 19,300. That's a level of resistance on bank Nifty. Ratnakar Bank is something that can be accumulated from a long-term perspective, so that's one that can be looked at. As far as public sector banks, we are seeing some selling pressure coming again in those banks right now.
Okay, that's of course about the bank Nifty, but just getting some more market perspective then. And Mr. Prabhakar, we have seen constant selling coming in from foreign institutional investors, and of course the upcoming Fed rate hike, I think that's going to put in some more pressure in terms of flows. So do you think that there is more downside?
See, there can be a downside, but now we see some pullback till 8,400 or 500 levels before the next round of selling can come. Without a rally, I don't think there is likely to be a selling pressure. Whatever selling, even today being a Friday, if the selling pressure was there or people were afraid to take positions, then today we should have seen 8,000 level breaking, but it didn't happen. So maybe we can see a gap up or a positive opening on Monday, and if it sustains about 8120, then 8,500 is looking possible by next 15 to 20 days, post which there can be a correction or there can be a rally, which is now not very clear to me. But I think there are stocks and sectors where it is likely to give a very good return. That is more important.
Okay, let's nail it down to some top ideas. And Amar, what's on the radar based on your technical analysis?
Yeah, the first one is Engineers India. That's a buy call in the range of 280 to 282 level with a stop loss of 270 and a target of 300. So that's on the buy side. There is another strategy that's on the sell side, that is sell Vedanta futures in the range of 206 to 208 with a stop loss of 212 and a target of 198.
Okay, two ideas coming in over there. Engineers India is a buy, but Vedanta's November futures are a sell call. That's of course the technical call from Amar. Mr. Prabhakar, comment then on some long-term ideas for somebody who wants to hold on to stocks for a long-term horizon of maybe more than a year. What would you advise?
We like Power Grid target 275. Power Grid has a net profit margin of almost 30%, and if you see constantly they have been growing at 25 to 30% top line and bottom line. And telecom is the growth in telecom is very high, and going forward also this growth is likely to continue. 30% net profit margin is not a small margin, and if I look at it like now what is the impact US is going to have or demonetization is going to have on Power Grid, it is not going to have any impact. So this is one stock which can outperform the market, and with all the stocks almost Nifty stocks down 10%, this stock has been up 10% this month, and it is one of the stock which is making regular 52-week high and all-time high. So this stock is going to be likely to be an outperformer. Next is PNB, which is the second largest bank now after SBI. Now it has the second highest network of branches, and whatever we are seeing in the demonetization, the private banks have not accommodated public. Now whereas PSU banks have accommodated them. So I feel many accounts can be opened in PSU banks. Now people who don't have a bank account, or people who want a normal service, who don't want a high-tech service, that crowd is likely to be with the PSU banks, and PNB being the second largest PSU bank, I think that is where the next trigger is going to be there, and they would have collected a huge money, and NPAs are also likely to come in collected. So I have a target of 220 on PNB. Both are long-term buy.
Alright, Mr. Prabhakar, thanks very much for running us through your ideas. And gentlemen, lovely having you with us today on the show with your market perspective. And on that note, we wind it down from everyone that put the show together. Thanks for watching. Catch you next week.